Introduction to Technical Analysis. Today, we are going to dive into the technical side of the market. This will be your toolbox. With these tools, you'll be able to see where the buyers coming in and when the sellers are taking over. The technical analysis is the edge you need in order to read the market correctly. When we are looking at the charts, we are actually looking on price movement, which is the behavior of the buyers and sellers, the two forces that move the market. Chapter 1. Support and Resistance. The concepts of support and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. At first, the explanation and ideas behind identifying these levels seems easy, but as you'll find out, support and resistance can come in various forms, and it is much more difficult to master than it first appears. We can look at the market the same way you are looking at the room you are sitting in right now. Below us, we have the floor, support, and above us, the ceiling, resistance. If you will throw a tennis ball against the floor, what will happen? The ball will bounce back up, and if you throw it up against the ceiling, the ball will start to drop back down. That metaphor is simply a way to understand the behaviors of the market. As you know, most times the market doesn't move in a single line, but in a series of waves. Learning to identify the areas of support and resistance can give you an amazing edge in trading the market. Key rules for support-resistance levels. 1. The more times the line is being touched, the stronger the support-resistance levels are. 2. All support and resistance levels can either break or hold. But what we know for a fact, that is where the magic happens. 3. Support and resistance can be found on all time intervals, from the 1-minute chart to the monthly chart. The greater the time interval, the stronger and more reliable support and resistance lines will be. Here is an example of a support level. You can see very clearly that every time the price came to the support line, marked area, the buyers began to take over to raise the price, just like the tennis ball bouncing from the floor. Here is an example of a resistance level. Notice the price tried 3 times to break above the resistance level of 114.40, but failed every time. We call this a triple top, but we will discuss that further in the course. Chapter 2. Trend Lines. Simply put, short, intermediate, and long-term trends are the 3 kinds of trends that we see each day in the market. A famous quote from Wall Street: "The trend is your friend." Markets are made up of several different kinds of trends, and it is the recognition of these trends that will largely determine the success or failure of your long and short-term trades. There are 3 kinds of trends in the market. 1. Uptrend, higher lows and higher highs. 2. Downtrend, lower highs and lower lows. 3. Sideways trend, dashing highs and lows. To sum things up, I hope that this short lesson helped you in understanding a bit more as of why the market moves the way it does. Take some time with these ideas and see if you can spot them by yourself in the market. This is only the beginning, as we are going to dive much deeper into this subject and more later on our course. See you on the next lesson.